right, good morning, everybody. Lou Porcelino, Man Over Market. Anthony Porcelino, Man Over Market. We got Sal over here. We got Chris at her house. We got Pat down in Houston. So the whole team is ready to go. Anyway, Thanksgiving week. First, let's get some more important business out of the way. My son, Western Illinois, won their game, got into the playoffs. We will be at Dayton next weekend. And if we win that game, we will have a rematch with Illinois State the following weekend. Very proud of my son, his team, new coaching staff. It's taken them through, basically, this is their third season as a staff. Hard work, dedication, changing the attitude on the team is allowing them to get the playoffs just in their third year. Also, this is the message I'm sending to you as a trader. This is not going to be easy. You guys get into our trading program. It will be hard, but you will benefit in the end. I talked to my son and my daughter, both my youngest two. Not that the other seven have not have done well in life, but my daughter was a soccer player. They told her you're not fast enough, big enough, and she ended up going to Northwestern with her grades and playing Division I soccer for 4 years. Same thing with my son. Not big enough, not fast enough, Division I, full scholarship, and he's been a 3-year starter. So stick with me, and I'll coach you guys, and we will be successful traders. That's what my message is to you. All right, special meeting of the Fed, the Sunshine Expedited Procedures. So that's coming out 11:30 Eastern Time. So I will show you when we share the charts. I'll read the notice to you. And there's actually people we can call. We should probably do an online call this guy David Skidmore and say, well, what'd they do? Did they raise rates or what? So anyway, we'll find out today. Markets are kind of mixed. We had option expiration on Friday. Markets are mixed as across the board, with the exception of oil, which spiked down to 40.40 this morning. And then the Saudis came out and said they're going to cooperate with the rest of the OPEC nations to stabilize oil. Now, do you believe that? I don't know. I don't know if I may fade that bet. So then oil spiked up to $1.50. It's kind of scary that 3 little words can control the market. All right. So let's get to sharing the charts, and let's get into the day's trading. All right, here's the notice that was put out, advance notice of a meeting under expedited procedures. It is anticipated that the closed meeting of the Board of Governors of the Federal Reserve System at 11:30 a.m. on Monday, November 23rd, 15, will be held under expedited procedures as set forth in Section 26 LB.7 of the Board's rules regarding public observation of meetings at the Board's office at 20th Street and C Streets, New West and Northwest Washington, D.C. And this is what they're going to be talking about: the review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. That's what they're meeting about. So sit on your hands until that meeting comes out, because it says here, a final announcement of matters considered under expedited procedure will be available in the Board's Freedom of Information and Public Affairs Office and the Board's website following the closed meeting. For more information, please contact Michelle Smith. Maybe we should call her. Dave Skidmore. All right. Dave Skidmore. I went to college with a kid named Dave Skidmore. I wonder if I should give him a call. 202-452-2955. We should probably, could somebody call them and send me an email and see what they say? That would be great. That is 202-452-2955. Maybe I'll try to call them right now. All right. Here we go. Here's the yes. All right. We are stuck in a range, right? We're right about here. 20, the high of this range is going to be 21.13. The low of the range is 21.15, so the range is shrinking. All right, we're getting contraction, and the market will make a move from there. Okay, we are approaching the last month of the year, and Thanksgiving week around here is always pretty festive. But it's my wife's favorite holiday for some reason. She loves Thanksgiving. And I don't know why, because she's not really a good cook. So it's terrible. Hey, Anthony, I'm telling Auntie Julie that you're laughing about her cooking ability. All right. So what she does is calls my mom, and my mom comes over, and she helps with all the cooking. All right. Let's take a look at the overnight action. I'm going to merge this back over here. All right. We got a high of 20.92.5. All right. We got a low right here of 20.82, but I put this here because this was the low on Friday. So the 20.82 to 20.81.75, we're kind of basically trading in the middle of the range. Okay. Sometimes I like to split right here the previous day into three sections, right? Hour and a half, middle two, and the last two, right? And you can see that, we had since when we made the high, I was looking for 20.97. I had said on the opening we're going to get a slow rally up to 20.97. I kind of recanted a little bit because I thought that the market had to get through 20.94.75. I put out should stall here a little bit. Well, it did. Made a high of a half, and then we went down and traded lower on the rest of the day. Just to, at the end of the day, we went up and we tested it again last night. We didn't get it all the way up to the high, but we got back to the mode overnight, which was 20.92.5. So, look, once again, the market is being, as far as I'm concerned, is, not a lot to do with what the Fed is going to do, right? So that's one of the issues that we have to worry about. It's not really trading it on fundamentals. The market's higher basically on a handful of stocks, and everybody else kind of mixed to lower to unchanged. So taking a look at this is another area of concern. Some unfinished bottoms down here. There's 20.75.25, and I think that all this area down into here, down to 20.50 is still in play. Let me change this, otherwise we'll be here all. Yeah, okay, there we go. I think this is all in play down to 20.50. Okay, and I think that this is going to be the range we will be stuck in until the market makes a move one way or the other. All right. Today, of course, it's always the key is to take out either side of the Globex highs or lows, and here we've got 20.92.5. All right, and then ultimately we got these three little single prints up to 20.94.75, and then I think if we get above that, then we have all these old highs to look at: 20.97.75, 20.99, and some single prints up here at 21.02. You can just see all the targets that we are looking at if the market, single prints up to 21.08. So that's the way it looks as far as I'm concerned. If you take a look at what I've just showed you in a chart form, okay, we're looking at right now value area high of 20.93, volume point of control 20.91.5, value area low 20.87. We'll use the bull bear zone of 20.83 because we came off the lows and went up higher. Up above here, I've got the 5-minute pivot sitting at 20.91. And that means we are in a sell. Let's see what the sisters are doing as far as starting out the day, because we'll probably get a choppy morning, especially if we're talking about the special Fed meeting coming up. All right. Oops. All right, here we go here. All right. So we got the Russell and a buy. I've got the, make sure these are all 5 minutes. Yes, they are. Okay. And I've got the, all three of these are in a buy, but we're close to their pivots. So we got the pivot of 1170. I've got the pivot here of 1769 for the Dow. Okay, and then we got here the Nasdaq at 4680.50. Okay, so those are in a buy, and the S&Ps are in a sell, which means we got some conflicting data. And once they are all in agreement on the 5-minute basis, I will let you know. Let's take a look. Oh, I'm sorry. You know what? That's why we got the conflicting data. Because I had the 15-minute chart up. All right. We're not in conflicting data. We have all four of the indexes are in a buy right now. Okay. As you can see here. And then I put the 15-minute up just to see where that was at. And it's up above. So we're going to get some resistance at 2091.75. Let's take a look at the 30-minute. And the 30-minute is at 2094, where you would expect it because we're talking about that high up there at 2094 half on Friday. So, now, I think I'm just going to sit on the sidelines and wait for the Fed to come out and shock the world. Possibly. Who knows what they're going to do, right? All right. So, here's an oil chart. Even though the problem here is that the data was merged, okay, because we had a rollover from Z to F, and so that's why it's you don't have the bars with the right corresponding colors, but you've got basically a couple unchanged, a little this close lower, and then another lower close. We are working right here. This is the current market today, but so we had that spike down and on the news, and so I guess we could all get long now because the Saudis said they're going to work to stabilize the oil prices. All right, so you guys can do that, and I'm going to still sell rallies until the market gets down to the mid-30s. Okay, all right, that's my opinion, and of course we all have opinions, and that's what makes the markets go around, right? So let me bring in the oil chart for today. Here, let's go. All right, so we got the value area high up here at 42.22, point of control at 43.30, 41.44 is the bottom, and then I got 41.09 is a bull bear zone where we're just trading above it. Here's that spike up after the announcements of those stabilization efforts. So you guys, that's the end. The market going down is over. It's done. So I just thought I'd tell you that. 41.09, keep an eye on that today, okay? And then, just think if we raise rates, then won't the rest of the world kind of be pissed off at us again because it will make the dollar stronger? I don't know. Anyway, here's gold. All right, gold still a little spike up. We're trading below value, 1079. Low is 1075.20. We got a point of control of 1076. I've got the bull bear zone down here at, we didn't put it in on the chart yet. No. I don't have it in writing. I should have put it in writing. Let me see what price that's at. Yeah. All right. We got, I think it was 1064 half right there. That's what I got as the bull bear zone for oil. For gold. Gold is still thinking that we're going to get a rate hike. So, it keeps trading lower. All right. And the bonds, very dismal. Can't even, they're in this range. They're trading up a little higher inside value. I got a bull bear zone is 154.09, 154.31, 154.15. So it's like the bonds don't know. If the bonds were sure, they'd be down to like 148. So, not really, not much news coming from the bonds. Okay. And then, I actually had the gold chart I wanted to show you. Hold on a second. So this is a gold chart here that I showed you that, when we went through the pivot here, and I think the market is heading down. And if we do get the rate hike, I think you're going to see gold down around $1,000. Okay. All right. Any questions over there, Anthony?
Yes.
And the rest of the news today. Okay.
So we're trying. One of our traders here on YouTube wants to know when you're distinguishing like a P or a B shape on the profile, what time frame you're using to distinguish that.
The profile is all our profile is done in 30 minutes. They're all 30 minutes. So let me bring it up. All right, so here's the profile. All of the letters are in 30-minute increments. Now, the reason I believe, and I'm pretty sure that the reason that they're done in 30 minutes is because when we were trading on the floor, we used to have 30-minute brackets. So like the S&P pit would open up at 8:30 Central Time. All right. That's why we use bracket B, because that's the regular pit hours. Right. And then every 30 minutes, there was a different bracket change. So that's how profile got started. When Stottlemyre started doing profiling before there was volume, he would track every 30 minutes in between the brackets. And that's how he got the 30-minute time frame. So that's how you get to 30 minutes. All right.
That's about it.
That's it. With questions?
Yeah, more comments than questions.
Any good comments? Anything I like?
You'd like all of
them. All right. Hold on a second. Let's go back. Let's just talk about life, okay? I think that's I can't. Oh, there we are. All right. So, I'm even though I don't think that the economy warrants that we should be cutting or raising the rates, but at the end of the day, let's get it over with, and so the market could start trading without such the heavy-handed news of the Fed lurking over our shoulder at all times. We used to, when we were on the floor, we used to, this is such a new experience. Not a new experience. I mean, it evolved where you got, where information started flowing into the pits and flowing into the markets almost immediately. Overnight information kind of took some of the fun out of the markets. I'm a little concerned that with the ability of information and the credibility of where it comes from is also a factor. So I don't know. The world is changing place. I'm an old fazul now, or getting to be an old fossil. But when it comes to trading, you know what? It's real simple. Discipline, discipline, discipline. There's like 10 rules you have to follow. And the last rule I have is if you forgot any of the rules, go back and read rule number 1 that says follow all the rules, right? So that's the end of the day. Trading is more have to do with discipline than it is cerebral. I mean, you don't have to be a rocket scientist or a Harvard business graduate to be a good trader. You can find enough research out there and do the things that you need to do to be successful. Remember, we are not doing fundamental analysis. I mean, you may have an opinion where the market's going to go long term based on fundamentals, but we're basically looking at technical analysis and chart movement and where we think try to figure or determine where the market's going to be moved, where from all the people out there that are doing the fundamental analysis, right? Because at the end of the day, it's the long-term money and long-term players that actually determine where the market's going to go, whether they're right or wrong. Because when they're right, the market goes their direction. When they're wrong, they hit the sell stops. Okay. So that's one thing you have to understand. So any other questions, Anthony? Nothing? All right. Well, that's good. Very informed group of people. All right,
Eddie's giving us a nice shout out in here.
Eddie.
Eddie that we talked to.
Oh, okay. All right. And we are moving forward. All I can tell you is we're moving forward. Anyway, everybody, have a good day trading. Remember, let's wait till the Fed gets out before we start clicking at the mouse, right? I used to tell my clerks, when before news events, everybody come here, tie my hands, come over and tie my hands together so I can't, start yelling and shouting. Of course, they tried to do that, and then I was fighting with them. So, anyway, so remember, discipline. Let's stay on the sidelines until we get an indication what the Fed's going to do. All right, everybody. Good day. See you tomorrow, and stay with us on Twitter. Thank you.